All right, we're gonna go ahead and get this started. Today, recording is rolling. Thank you guys, everybody who is here joining Tuesday night, trying to get some information and trying to better yourselves, right? We're here today, bettering ourselves, getting some direction analysis in. We're going to talk about Bitcoin, ETH, XAU, as we were talking about, and GBP, JPY. We're going to look at some old plays as well as some old behavior, some behavior that happened today with Bitcoin and ETH, especially to understand why retail was long, right? Why they were looking for upside, why they continuously wanted to take this trade to the upside, and why it did not go to the upside, why we saw the opposite of that, right? On something that we didn't see much of a catalyst for, meaning there wasn't a lot of news, right? There wasn't a news release, anything like that today that pushed that volatility into the market, and um, this proves that theory, right? That not all of retail is just moving the market, meaning that there's that algorithm out there, right? That one entity based off of how we are looking at it from an institutional perspective that is moving the market to manipulate that liquidity, right? Because there is that one entity out there from this logical based institutional perspective type of look at it, right? That will sit there and they can't cover their own positions, right? Because their positions are so fat, they're so big that they cannot cover their own positions, meaning there has to be every buyer for a seller, right? So where is their seller for a buyer? How are they able to make money? Well, they're going to have to do it through that retail liquidity, right? Through getting a lot of money out of the market so then they can get into more positions, right? Start to boost their positions within certain areas and capitalize the most out of that certain move, wherever it is at, right? So let's go ahead and get into Bitcoin first. We'll talk about the behavior that happened today as well as how we could have understood why that happened, what was screaming to me, right? Why I was looking for lows, why we are continuously still looking for these 17.5K lows we talked about, right? That monthly um, liquidity that we have here, that monthly sell side liquidity, those equal lows that we have here, we can see it looks like a drop based drop, right? Not a lot of longs behavior is being shown to me right now. I want to see some type of liquidation, right? And post a move to the upside that leaves that imbalance, leaves areas to come back to. And then the slow, right, lethargic moves into those areas for then the continuation to the upside. But looking at our higher time frames, right, that draw of liquidity, that higher time frame liquidity is going to be what price is going to be drawing to, meaning that higher time frames, right? This is a monthly chart. So if you have a lot of traders trading a monthly chart or any type of trader trading a monthly chart, there's going to be a lot of liquidity underneath these lows, right? A lot of money underneath these lows right here from traders who are in back here, from traders who are in right here, right? Because what's the easiest thing to do when you want to be right? What is the easiest thing to do? Go to the chart, right? And let's say I wanted to long back here, just as a quick example, right? This is a 12-hour chart, mind you. We can go to a lower time frame. Let's say I wanted to long right here. I saw something that I thought was good, right? And I wanted to take a long and take it to the upside. Instead of following that risk management, right? Because I'm not managing risk, I want to be right. Remember, instead of following that risk management, finding a low up here, using that, right? Whatever it is, and you end up getting stopped out of the trade because your narrative isn't right. Whatever that is, what's the easiest thing to do at this point in time? To where I can say there's no way it goes past that, and if it goes past that, then I'm wrong, right? Take it to the most external point, right? The lowest low or the highest high, and that's why we see those areas get manipulated as they do, because then we get areas like this, right, where we're manipulated out. Retail tries to take this to the downside, and then they're taken out, right? And we see accumulation, a spring or something like that occurs, and we get the continuation or the reversal to the upside. But scenarios like this where you want to be right and you put your stop loss underneath the lowest low or the highest high, whatever it is, remember this is a higher time frame chart, right? So this is a big loss necessarily or however it is, right, based off of your risk management. But within these scenarios where you want to be right, you're putting it at the lowest low, right? So retail, the uninformed money, the gamblers who want to be right, no matter what, they'll hold till zero, right? They'll put it underneath these lows right here. That's just the most external point. It is the easiest, most simplest point. So then when we get to these buildups, right, of that liquidity, All of this is doing is just giving more reason, more fuel to then come to the downside from our overall, right, bearish narrative that we have in place. We end up seeing highs rated to the upside. What does this do? Take all the shorts out of their trades, right? They all get into longs. That liquidity is being shown right here. Retail's looking at this as support, right? Basic support, trying to take this to the upside, whatever it is, right? They're like tapped it once. It's continuing to show that strength off this zone, whatever they believe that is to be, right? So their stop losses are at that most external point down here. Just more reason, more fuel, right, for the stops to be ran to the upside, the supply to be introduced within these areas. We see more buy side liquidity being built up, or sorry, sell side liquidity being built up, right, as we are moving up, as we are manipulating highs. What do we talk about when we look for distribution, right? The manipulation of highs while we are leaving lows. That's exactly what occurred here, right? And then when we got the final run of the highs right here, we got an internal break of structure within here, right? We saw that run up, that liquidity grab, and then that large move to the downside following. But these scenarios like this, where you want to be right, you're going to be placing your stops underneath these lows. And it's kind of that same exact narrative as far as the daily chart goes. And as far as these higher time frame charts are looking for Bitcoin and ETH. Looking at these higher time frame charts, right, we do see some demand introduced within these areas here, and we aren't seeing any structure or anything like that within these areas just yet. I'm not looking for longs. There's no reason to be looking for longs if we're continuously going to be looking for shorts, right, until proven wrong. But once we are proven wrong and once that long bias is shown, right, either from the liquidation of the 17.5K lows, or if we respect this institutional candle here at 1982, that we are starting to show some type of move off of, right? Nothing too heavy, nothing yet, literally just a couple candles. I do want a lot more structure before I look to play anything, right? But within these scenarios, let's just get out of replay mode, where we have these situations like this, where retail is trying to take this to the upside, because you look at this, right? And this is from a gambling mindset, right? Or somebody who wants to be right. They look at this and they say, well, let's take this to the upside. They look at the higher time frame charts and they say, look at all of this space, right, to the upside. Look at all of this profitability, opportunity, and look at this break of structure to the upside right here. And then they're like, demand is within this area, right? We're starting to mitigate that demand. What does that do? This is Bitcoin now. This is your daily chart, right? When they get to that area of demand, right, that super clean area that is very easy to see on the chart, right? Very simple to see. Once we get into those areas, we create more equal lows. What does that tell me? That our overall narrative is still bearish, right? We're still creating reason to come to the downside with that structural narrative as well. We're still bearish structurally, right? Based off of market structure. So why am I looking for longs at this point in time? I'm only going to be looking for shorts, right? Until that narrative is changed. And as you can see, right, who's getting paid more and faster, right? Shorts to the downside, shorts to the downside. These weeks, right, we can look at the time period here that we took to come up to these areas, right, just from this move right here to the upside. Let's look at this move, this push to the upside when we started out right here, right? So this 20% move to the upside that took around a month wiped out, right, in a couple days. This is your daily chart, so 1, 2, 3, 4, 5 days, right? Barely less than a week wiped out. What does that tell you? Which side is that on, right? We're just doing a time analysis based off of how quickly price is moving, and that's how volume is going to come into effect too when you look at volume. I don't look at volume as this is how many people are buying, this is how many people are selling. I look at volume as this is how quickly price is moving in one direction, right? This is how quickly price is moving either to the downside or the upside. If it's in a scenario where it's looking like it's going to spring, right? Let's just look at ETH LTFs to show this as an example. This little 1 minute chart to show the volume for this little accumulation that had occurred right here. There's a lower time frame break of structure after this liquidity rate to the downside. I can show it on the 15-second chart when we get there. You can see that redistribution, break of structure to the upside, mitigation of that, right? And then we created that demand and then mitigated that again. But looking at the volume, where would I enter on this? Because I'm trying to look for a trade to the upside, right? So where's the opportunity that is going to be given to me? Where's that footprint? And that's why I look for volume. That's why I look for the heavy moves within the market before I look to enter it, right? I'm going to go ahead and show the volume to show what I mean right here. So this entire time as we're coming down here, creating this small amount of buy side liquidity, we have a supply zone up here that we came and mitigated, right? We're currently respecting that, starting to move to the downside, which is completely fine. Our narrative is still bearish, right? But just showing you from this perspective of what we are looking for as institutional traders, when would I look to enter this market? Where's the volume and that break of structure that had occurred that I was looking for, right? We see as we're coming down, creating that buy side liquidity, right? Creating those equal highs. And then once we had liquidated all the lows, taken out all the early longs that we look for, we had that lower time frame break of structure. And then look at that as well, right? That move to the downside, that volume where algorithms entered positions, right? They push price to the downside to liquidate the lows, take out the early longs, get everybody into shorts, create more reasons for price to start to come back up, right? Mitigate areas of supply, and then continue to the downside. So they push price down, right? Algorithms are now entering within this area where I want to enter so then I can be protected, right? And not manipulated within higher areas or wherever it is, right? Looking for the algorithmic introduction. If we go on the lower time frames where you saw that break of structure, you can see that buy candle, right? That buy volume that we have right here after we get this break of structure. So we get this move to the downside, the volume enters the market, we get the break of structure to the upside. Trade presents itself, right? This is why I wait for certain instances and I go from higher time frames to lower time frames, but just using the structure and a supply and demand as well as liquidity, right? Analysis within just this price action right here, we can see how these trades can present themselves, right? Now that we have taken out the sell stops, we look for the buy stops. Where's the break of structure that had occurred? Where's the institutional volume? Where's that footprint, right? So sell stops are ran. Break of structure occurs. You have your little rally-based rally, right? Your area of reaccumulation, multiple confluences coming into play. Run the lows, break a structure to the upside, you create your area of demand, right? You can see more breaks of structures internally on the lower time frames. We hold the lows, we continue to the upside to the area of buy stops, right? Within your internal range right here. So you have something looking like this, right? Where you could have taken a possible trade from here to here, depending on the R&R, right? However you would have liked to take it, that's completely fine. But just showing you the behavior, how these come to play like this, right, is from these scenarios. We need to wait for the early longs and the early shorts to get out of their trades. So if there's a lot of instances, right, where either I'm not trading or you see Casper not trading, right, not within the market, that's probably for a reason, right? And it obviously it is personal based off of your narrative. If you're either a swing trader, right, scalper. Personally, I'm a swing trader. I like to limit. Personally, I'm a swing trader, right? I like to limit my trades. I like to trade at least, right? If I can get 1 to 2 trades a week, I'm good to go because I'm looking for that 2.5% a week. That nets 10% a month, right? I am happy with that. But if I'm making more on my trades, right, then I'm going to take that as well. I'm not going to go ahead and look for more trades or look for more possibilities. We're looking for our setups once they come to play. We are in our trade. We take what the market gives us, right? We manage risk because that is all we can do. We cannot control the market, but we can control how much we lose. So when these setups are coming into play, all we need to do is wait for that patience, right? And this is what I wanted to show you as far as the sell stops and the buy stops, and as far as the retail narrative, because we were just talking about BTC, right? With the narrative being overall, right? We're still looking for downside. So where is your high, right? Your area of supply. From this, we're talking about this redistribution. Now we'll go to the hourly chart just to show it a little bit more clear. We'll bring this back on the replay mode as well. But where's your next area of redistribution that had caused a new low, right? Your drop-based drop. Drop-based drop creates more supply. Next area of redistribution. We have a fair value gap as well. We come up to fill that. We also mitigate that area of supply, right? So this high here caused this low right here. Where's my range? Let's go ahead and draw that out. most external high to most external low when that consolidation occurred, right? So from this high to this low, like we are showing right here, this was your range. We come up into premium of that. We're mitigating that area of supply that had caused that new low. Do we ever violate this high that caused a new low? No, we don't. Do we ever violate this area of supply that caused a new low? No, we don't, right? So we are still looking for now this low to be taken out as it is the weak low. This is your strong high that caused this weak low. As long as, right, price continues to respect this high and we break structure to the downside on higher time frames with displacement, then we're going to continuously look for trades to the downside. Right, we saw a large break of structure to the downside with displacement. Volume came in, right, on that move as well. What does that tell you? Supply has been introduced within this area now, right? So now we are looking for price to come back up to this area that had caused this internal new low, right? Because we have now introduced more supply after mitigating supply as well as taking out the early shorts, filling in that area of imbalance, right? We're within premium as well. It can be complicated, right? And sound very complicated, but it's very, very simple. Early shorts are taken out. We're expensive. Now we are going back into discount. We take out the longs, right? It's literally a battle of liquidity. How is money being made? Liquidity. That's it. Um, so we're looking how structure, right, and quote unquote supply and demand can help us for a guide as far as how price is going to move. So we see more supply that is being created, right, on that move to the downside right there. We're looking for price to come back up into areas that cause that break of structure to the downside and then continue from that. If this high is violated, right, then I'm looking for this as a break of structure if we break it with displacement to the upside, and I'll look for demand instead. But let's go ahead and play this out. Do we ever violate this high that now caused this internal new low? This high caused this low. More breaks of structures to the downside. Area of supply. Do we ever violate it? No, we do not. Do we still violate this high that caused a new low? Let's go ahead and watch this out. Right now, all this is just a buildup of liquidity. Early longs and shorts trying to get into trades. Late longs trying to catch a bottom, trying to take this trade to the upside. They see this, right? Break of structure to the upside, and they say support, 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 break of structure, continuation. Let's take this to the upside, take this up here, take it to buy stops up here, right? Maybe they're looking at equal highs or whatever it is. Price is not going to seek those equal highs, right? Unless the structural narrative is going to be given. We're still looking for the lows, right? And instead, all you see us doing is taking out early shorts over and over again, building more liquidity for algorithms to enter the market and then take this price to the downside and seek that overall liquidity goal that we had, right? Which was these lows that we see right here. So we see the buildup. This high caused this new low, comes back up, does not violate it. We cause another internal low. So we're looking for now this high to be respected, right? We can see that we're taking out equal highs as we are coming up into this range right here. Taking out the highs, but as long as we respect the high that caused the low, then we are good to go, right? And we can still see price continue to the downside. Let's play it out a little bit more. What does it do? Continues to the downside, right? We now have another area of imbalance, more supply that is being introduced. And we can now see how retail, right, is getting into that mindset where they want to continuously take this to the upside. And that gives us reason now for price to move to the downside. I appreciate you, Anonymous Fred, but this is how price moves. This is literally how money is made in the market. When you are looking at these charts, right, and trying to understand the narrative, when you look at this, tell yourself that you are set up to fail. Why? Because that is going to give you, right, now that narrative to find reason as well as the chart does, right, to now enter a trade. So we now have to go in here, find reason with the chart, waiting for the footprint to come into play, waiting for the reason to show, right? And then once everything is taken out, once the early longs and shorts are taken out, we can enter our trades. Once that structural narrative is given, and we are good to go, right? And I can now hold confidently knowing that I am protected within that algorithmic setup that we have right there. And if I am not protected, right, and I'm stopped out of my trade, then there will be a reason why. I can go back and look and say, oh, this high didn't cause this low or whatever it is. But keep it simple, right? I'm literally looking at this high that caused this low. If we break this to the upside, then I'll look for longs. Did we break this to the upside? No, we did not. All we did was continuously respect supply, take out early highs, cause more or create more supply and cause more people to get in longs, cause more reason for price to move to the downside, right? So we can get into this mentality a lot. MenTFX talks about the pajama stripe theory, right? Where we just see price continuously move to the upside and we say demand right here, right? And this is where the quote unquote dumb money comes in. And then we see another move to the upside and we see demand right here. And we see another move to the upside, right? And we see demand right here. And we're like, I want to take this to the upside, catch the bottom, catch the bottom, catch the bottom, catch the bottom. What happens? Create more liquidity, right? More reason to come down. And then we get into one scenario where we have a lot, right, of that sell side liquidity. And it looks like price is going to move to the upside, right? We get a large boost. Here comes the volume within the market, right? But where was that supply introduced again? Where was that displacement? Where was that footprint? We saw it right here, right? With this move to the downside right here. Where did algorithms enter again? Right here, right? Where did algorithms enter again? Right here. What's obvious? The elephants, right? The ICT talks about the elephants and the kiddie pools. This is obvious. This is obvious displacement, breaks the structures to the downside. This is where the algorithms are entering. If I go to the volume on each spot, look, we have volume on this move right here to the downside right here. We have volume on this move right here. We have increased volume on this move right here, right? You can see the multiple confluences coming into play, where the algorithms are entering, where we cannot get shaken out of our bias, right? So now that we are continuously looking for downside, we can see the supply that is being created, right? This was your candle, displacement candle right here, that broke structure to the downside internally, right? From this reaccumulation, your candle before that candle lies right here. It also holds an imbalance. So I now see more supply that is being created. So what is price doing before it continues to the downside? Taking out the early shorts, right? We're looking for a redistribution. We see more highs that are created. The highs are taken out, and then we get another break of structure to the downside. What does that tell me? More supply within this candle. So I'm not looking for a price to exceed this high or this high right here. If it wants to take out these these buy stops right here, right? If it wants to take those out, mitigate this candle up here, it can. But I'm looking for it to respect this high that caused this low right here. As long as the structural narrative is showing in place, right, then I'm looking for the continuation downside. But now that I have more displacement, more breaks of structures, I'm looking for price to continue from this point, right? And if we play it out, that's where we see that final continuation. We saw where the volume entered the market. We saw where algorithms continuously entered the market as well, where supply was introduced instead of demand, why they got retail getting into that demand type of feeling, right? Where they wanted to take this to the upside, where they manipulated retail based off of whatever pattern it was, right, that they were trading. But when we get into these scenarios like this, where we see a lot of buy stops or a lot of sell stops built up on one side within these ranges, then I look for my most external high that caused my most external low and vice versa. That's it. I look for my external high that caused my most external low. Look for my range. Where is price manipulating more, right? We are manipulating the highs more, right? As we are showing, we are taking out highs, 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 highs. What is it leaving behind? Lows. So it has retail on one side, right? And it has the algorithms on the other side. That's it. Most external high to most external low. I'm still looking for bearishness. It's still giving me the displacements, right? So I'm still looking for price to continue to the downside. Anonymous said he's overcomplicating it. It is very, 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 very simple to overcomplicate smart money concepts, but keep it as simple as possible. And I know I can sit here and say that and just say that over and over again, right? But when I talk about just keeping it simple, make it to where you could explain your strategy, right, to a 4-year-old or a 5-year-old, or somebody who couldn't really comprehend these terms or anything as such, right? I can sit here and tell a 10-year-old, right, look at the highest high and look at the lowest low. As long as it doesn't go over this high, right, then we can expect this low to get taken out, right? That's as simple as it is. Didn't exceed this high, that caused this low right here, so that low got taken out. The reason we was shown from all the sell side liquidity, as well as the constant introduction, right, of the breaks of structures to the downside, the contra introduction of supply that we see, right, over and over again as we continuously respect highs that caused internal lows over and over, get retail on one side, right, and give reason, give fuel to now continue to the downside from our overall bearish perspective, right, that we had. So overall, right, for Bitcoin and ETH, I'm still looking for lows. For ETH, it is a little different story just based off the certain range that we are at. I do like the amount of buy side liquidity that we are starting to build up with all of these equal highs that I'm starting to see. But like I was saying before, right, price is not going to seek those until that structural narrative is then given to us. So we need to look for that bullish structure to be given to us on a higher time frame. I'm still looking for daily chart, to be completely honest. Before I look for any types of longs, I'm just going to continuously short over and over again on the new areas of supply that were created until I am given that long narrative, until I am proven wrong, right? So still looking for those 17.5 lows overall. We showed the monthly chart. We can show the weekly chart as well to show those lows that we have in place. If we close under this, doesn't look very good as well. We could definitely see that continuation downside is starting to look like a drop-based drop, created more supply within this area. We could see a retracement back up into this supply zone, and then possible continuation to the downside to that overall liquidity goal that we have. One thing I will say about Bitcoin, though, on the weekly chart, this volume is starting to look good within these areas. I'm not going to lie at all. This volume is starting to look nice. This is one of the times where we've had actually the most volume within Bitcoin, which is telling me that we could start to see some possible accumulation within these areas now that we are in discount, right? Overall, also within areas of demand from lows that had caused new highs. But until that structural narrative is given to me, then I'm not going to be taking any longs, right? So with ETH, right, very, very similar story. Let's go talk about the structure as well. Let's talk about that move that happened today, why I was also talking about those highs, and why we have areas of liquidity to seek. But overall, right, I was looking for a possible return up into this high that had caused a low within this internal range for the continuation to the downside overall, seeking these lows right here into areas of demand, right, within balance that had caused our original break of structure to the upside of this range right here. So let me just take off these to not make it very complicated for you guys so you can understand what we're looking at right here. Right, but overall, we got our break of structure to the upside internally, right? Our weekly is still bearish until we can get over these highs that had caused new lows right here. Or if we create new supply and then break that supply, then we will look to continuously, or then we will look to take this to the upside. But right now it is not given, right? Looking at a weekly chart, I can see weekly equal lows that we have right here. We go to the daily chart, that is also showing up, right? We can see these daily equal lows that we have in place. We came up to this displacement candle, mitigated this displacement candle. Yes, I'll go ahead and check KNC in a bit here. But price came up, mitigated this area of supply, right, that had caused this new internal low right here. And then we saw that reaction from it. This high caused this low, right? We see the mitigation of that and then the continuation from that. More reasoning, right, as we're manipulating highs, leaving lows coming up into these areas for price to continue to the downside. Higher, or sorry, lower high, lower low, lower high, lower low, lower high, right? Keep it simple. Go to the lower time frames, show the same exact narrative. This high had caused this low. Where was that supply introduced? We talked about this on stream, where we entered, right? With these entries right here. That was literally where supply was introduced. On our entries, we see the mitigation of that supply and the continuation to the downside, right? That is literally it, as far as how these setups come to play. But looking at Bitcoin and ETH, I'm still looking for the continuation to the downside. We are still getting displacement candles to the downside. So one, either we close On the 4 hour right here, then I'll be looking at a possible fair value gap for price to come up into, and then break structure on the lower time frames to take this to the downside, seeking that liquidity, seeking those lows. Once that is given, entries and exits will be posted as always. But I'm going to go ahead and check KNC now, and then I want to get into XAU USD. Why ran for a 157.21, why we can possibly still run to a 187 plus and R&R, what we are looking for on it, as well as silver starting to come into a certain POI. So let's go ahead and look at KNC. Not in our stock section. All right, the Binance chart. I haven't looked at KNC in a long time. The thing is with a lot of these altcoins, I do say this a lot, and I only like to trade Bitcoin and ETH for the amount of liquidity that is available within them. But with certain altcoins, like KNC or ones that we have a lot of volume, right, within the certain coin, meaning that there is just more money in it. Why top tens are able to be traded, right, by forex, some forex brokers and some firms that are coming out, right? Because they have more liquidity available within them. But a lot of these altcoins right now just don't have a lot of liquidity available within them. They're very choppy. Not something that I want to look to stress myself over, right? But with KNC, we're going to go ahead and take a look here. Look what price can possibly be doing, right? Look what the narrative is. And the reasoning why I talk about altcoins the way I do is I usually don't even look to trade a lot of altcoins as a swing trader, right? Until I get that large move on Bitcoin and ETH. Because I know they're not going to move unless Bitcoin and ETH moves, right? That's just how it is within this cryptocurrency market, as Bitcoin has that dominance, right? Over 50% dominance over the market, which is insane. Um, but with KNC, let's just go ahead and take a look at the structure where price could possibly go to next, right? So looking at the daily chart, we see area of displacement, right? From this high that caused a new low right here, we can see price came up into that area of supply that had caused that move to the downside, right? That consolidation, that M that we see here, that market manipulator M, the raid of the highs, break a structure to the downside, come up into supply, continuation to the downside, right? Reasoning for price to continue to the downside. But as far as it goes, right, for a lot of altcoins, I almost always wait until Bitcoin and ETH have a large move on a higher time frame before I even look to swing any altcoins, because I personally just know they're not going to move, right? With that dominance, they're not going to go unless Bitcoin and ETH does. So I wait for Bitcoin and ETH to show that move, and then if there are some really sexy alt coins that are looking good, then I'll look to take those as well. That helps out with stress, right? That helps myself not have to be looking at a bunch of charts, not having to find a trade all the time. Um, and as well as trading less, right? So now I have a overall narrative. I know that if Bitcoin and ETH are bullish, then most altcoins are most likely going to be bullish as well. So then I can look for other confluences as well, right? Our strategies that we use, whatever it is you use, personally institutional concepts, right? But once that comes into play for Bitcoin and ETH, if it's upside, right, then I'll look at altcoins. Look for bullish structure, look for those reasonings, and then I will look to take those to the upside. But as far as Bitcoin and ETH, right, I'm still looking for that downside. Apologies, but as far as Bitcoin and ETH, right, I'm still looking at the downside, looking at KNC right now. Very similar, right? We can see a lot of clean lows that we are creating right here. We came up into this area of supply, did break structure to the downside. I would look for continuation to the downside, but this coin, right, doesn't show a lot of liquidity. We aren't seeing a lot of large moves from it following or happening very often, right? So personally, it's not something that I would look to trade. As I just wouldn't want to stress myself out, right? But that was KNC. That's just the higher time frames, right? I can go to lower time frames too, just do a little bit of analysis on that. We have this move up into this area of supply, this reaccumulation. Looks like we're starting to create equal lows at this area as well. We violated that reaccumulation, came up into this high that caused a new low right here. So now that we are at this area, continue to break structure to the downside. I honestly is would look for continuation to the downside at this point in time. This is just the 4-hour chart. Looking at this could be that dumb money, right? Within either this trade right here or some order block, whatever they have, trying to get into this over and over again, right? We could raid these lows right here, break structure with displacement, but right now we can see all the volume, right, is being shown on those moves to the downside, on those breaker structures to the downside. But like I was saying, this isn't very clean price action that I would want to look to trade. Obviously going to be looking to trade Bitcoin and ETH as far as cryptocurrency goes. But for the higher time frame moves, it is a pretty good tip, right, to wait for the Bitcoin and ETH to show that structural narrative if they get that break of structure, right, to the upside or the downside, for the higher time frame plays on a lot of these altcoins. So I wanted to go ahead and get into XAU now. Talk about this trade that we are currently, this one right here. Perfect. Currently ran up to a 1 to 157, right? How that came into play. We talked about the entry. We actually went through the entry with replay mode on a previous stream. If you want me to link that, I can, but it is in the playlist. You can go ahead and go back and check on that. It's literally called XAU Swing Entries with LTF, right? Entries. But understanding how this occurred, why we are still looking for lows, the same exact narrative that we talked about with Bitcoin today, right? Showing that trade to the upside, or people trying to take that to the upside, right? Showing that manipulation of those lows. Same exact scenario right here, right? Overall, we've been talking about gold for months now. Overall, we were still looking for those higher time frame lows, right? From the introduction of supply, break a structure to the downside on the weekly time frame after we had taken out the buy side liquidity, right? And now we have reasoning for price to continue to the downside with the clean lows, right? The clean equal lows on higher time frames that we are creating. But we had our weekly break of structure to the downside. There's the displacement. We came back up into that area of supply, right? We had our daily break of structure to the downside as well, created more supply. We had a break of structure of the reaccumulation that caused this push up into this area of supply here. I had my range that was created right here on lower time frames. We'll go to the 4-hour chart. All right, so retail is looking at this, and we'll just go to replay mode and try not to mine this real quick. I was going to hide it, but I think it's going to be too much real quick. But let's just go into replay mode and bring this back here. And understand that same exact narrative that we were looking at. So retail looks at this, right? And what do they see? What is very simple to them, even from the institutional mindset of looking for that displacement, right? They see this move to the upside right here. They see this move to the upside right here. They say this low caused this new high right here. And then they say, look at this. Buy side liquidity equal highs, right? They're like, look at all of this. Everything that we have to come grab. Look at this unmitigated supply zone up here that caused this new low overall. We have to come up there and grab it, right, to come down. No, we do not, right? As long as we continuously create supply, as long as that is being shown, then we can look to take this to the downside, right? They can look at an area of supply up here, maybe even up here, and say, okay, we broke structure to the upside, right, on higher time frames. We are now mitigating those areas of demand, right, that reaccumulation. We're going to continue to the upside. We're going to come up to this high, take out the buy side liquidity, right, and then we're going to go down. We don't know that that's going to happen, right? So we need to follow that structural narrative that is being given to us at that present time. I can't make up all these scenarios because they're not there yet, right? That's as simple as it is. That wave has not presented itself, right? So why am I even there? Why am I even trading? Why am I even looking at the chart? Why am I even trying to come up with a narrative, right? It is not there. But looking at our lower time frames, right? We had come down into these areas of demand. We talked about that next area, or that next structural low that we were looking to take out from this weak low that was presented right here, right? The high that had caused the low of the range. We'll go to the lower time frames now. Look what happened as we came up into those areas. We talked about the reaccumulation, how we took out the highs, right? We had that distribution to then accumulation, took out the lows, broke structure to the upside, and then price started to move to the upside into that area of supply, and how we use that as a disapproval theory, right, to then take it to the downside and go with our overall bearish narrative, right? But that reaccumulation occurred. We started to move up higher into these areas. I'm looking for the buy side liquidity to be taken out, for the early shorts to be taken out, then the break of structure, introduction of supply, and I can look to take the trade, right? Price comes up into those areas, starts to manipulate those highs, comes up into this area of supply, right? And then on lower time frames, we can see once it starts to do that, we're looking for breaks of structures to the downside for the supply to be introduced. We get that displacement to the downside. We can see volume is now starting to come into the market as well. It's kind of choppy with these little symbols that we have down here. Apologies, but we can see volume is starting to come into the market. I can go on lower time frames to kind of show that out. Yep, we see that volume right here. All right, so I was looking at supply right here, and then I was looking for the same thing, right? If we did not come back up into these areas of supply, I'm looking for early shorts to be taken out and new supply to be created, right? So where are the next equal highs that are available? We'll go to lower time frames just to show this out. We'll play this out now, right? We come into this area of demand from this low that had caused this internal high right here, pushed us up into this area right here, broke structure to the upside on the 1 minute time frame right here, came into a lower time frame imbalance. I believe it was a 15-second or 30-second imbalance. I can't 100% remember, but we came into this area, broke structure on the 1 minute time frame. I was looking for the 15-second time frame from this high that caused this low right here, and ended up getting broken. I ended up having an available play to take it up to that area or those buy side liquidity, right? Those highs, to take out the early shorts and then look for the continuation downside. So let's look where the high caused the low within this range right here. I was looking for this high, mind you, and this is where I was wrong, right? But it also gave me an entry, still showed me, and I was able to be taught something, right, from this move to the upside right here. The next area of redistribution that had occurred from our break of structure to the downside, where was that displacement? Over here, right? Where was that demand introduced? On this move to the upside right here. And then it was violated on this move to the downside right here. So this displacement to the downside right here is what had violated that. What started that move right here? You might look at this or might even look at this and say that was the most obvious area, right? But we're looking for that consolidation that had broken this area of demand right here. So we had started it out actually from this high within this range to this low right here. So as long as we don't exceed this high right here and still show structure breaks continuing to the downside with displacement, then I can still look for trades to the downside. If so, I wait for the early shorts to be taken out. Let's wait for them to be taken out. Early shorts are taken out. Displacement comes into play, right? Here's that displacement candle that is being formed. I now have that candle before candle setup that I'm looking for. Price comes up into that area, right? Mitigates that. We see another structure break to the downside, another area of supply that is introduced. Takes out the highs, another break of structure to the downside, more supply is being introduced, right? And then we have that final move that occurs from that, and we see that full continuation to the downside following, right, our creation of supply. So even though we were looking for price to come up into these areas, we still created supply and continued to the downside. Highs were taken out, right? That buy side liquidity was taken out, supply was introduced, and then we saw that continuation to the downside on those moves to the downside. But overall, on the weekly time frame, right? And the reason I'm showing you all this is because we were looking for that swing. So once we had that higher time frame to lower time frame analysis, right? And once we had that entry that was available, I'm now holding for that weekly time frame, right? That weekly area of sell side liquidity. So we had a lower high, lower low, lower high. I'm looking for the next lower low with liquidity as well, right? Structural liquidity, so multiple confluences coming into play. So that was as far as XAU went. We'll play this out, see how this happened, right? What we want to see when it comes up into our areas, right? Obviously, we entered and then we got a large displacement to the downside, following exactly what you want to see when it comes into your areas or the reactions off of your entries, right? But then if we just play this out following, then we see the move just drop off after that, right? Now into areas of demand, and that's when it had received that 157 to 1, right, at this low right here when we had mitigated these areas. But dumb money over and over again, right, is looking to continuously take this to the upside. But we know our structural narrative is still showing bearish. We're still manipulating highs, leaving lows, and still breaking structure to the downside. So why am I looking for longs? There's no reason to if the profitability opportunity that presents itself, right, is much greater on the right end, right? So why stress yourself continuously trying to come up with a narrative when there is no reason to at all is the basic point of this. On the higher time frames, we saw a high that caused a new low, right? We saw the mitigation of that, and then we saw the confirmation on the lower time frames up until that point, and then we are in our trade, right, holding for that higher time frame narrative, received up to a 157, looking for a 183 to 1 overall, right? Obviously, profit taking within that isn't going to make the entire profit off of this over 183 to 1, but there's still large profitability opportunity on a higher time frame to lower time frame chart, right? Obviously, you're not going to get entries like this all the time, but if you can still get up to those areas, right, where you can go from even a daily to a 5-minute or a 15-minute or even an hourly chart, I've seen a lot, where you can risk still 0.5 to 1% and still have and get these large moves that are following, right? Because we are still looking for that structural liquidity. As long as it doesn't break now this high that caused this low right here, it could come all the way back up into this area of supply, right? And then still continue to the downside. So that's why we can now get confident within ourselves and confident within our trades, because we know the structural narrative and we know the structural liquidity and we know the draw of that liquidity, right? So that's what I'm looking for when I'm looking for entries. That's what I'm looking for when I'm looking for take profits as well. We need to have multiple reasons on both sides, something as well for take profits. If I were to look at this, right, I would tell myself, where would I want to long? So if I wanted to take profit from premium to then discount within this, where would I want to long? Well, I have that institutional candle that caused that new high within the range, right? Also something very simple that you can start to get as a little tip, a little help, right? When you start to look for take profits, look for those areas on the opposite end where you would look to take that trade either to the upside or the downside, and that will help with that. But that was XAU. I do want to talk GBP JPY now. Also a very, very similar story. I was very, very upset about this. I've been waiting for this one on, I believe it was over a month and a half now, but within this range, ever since this had started out. Yeah, 34 days, so not a month and a half, but roughly a month within this reaccumulation, but very similar story with GBP JPY. So overall, looking at a higher time frame chart, we are bullish, right? We talked about the bullishness from this push to the upside that we had right here, this low that caused a new high. So we are still looking for price to continue to the upside. We saw a lot of buy side and sell side liquidity being created, but where was it being manipulated within this certain range, right? And what was being left behind? Keep it simple. Where's your low that caused a high? Low that caused a high right here, right? We're looking for price to respect that area of demand that had caused that high right there. If it is continuously respected and reasoning is shown so that buy side liquidity is being formed, then I'll look to continuously take this to the upside, right? So we have our low that caused a high. We see them move up into that. We see the distribution. We come back down into discount within this point in time right here, and then we start to manipulate lows, and then we see the accumulation, right? We're looking for the distribution to then accumulation, reaccumulation overall, right? And then let's show what happened within this move right here. So now that we are within discount of our overall trend, and then we have a displacement to the downside from an internal high that caused a new low right here. We now have more retail getting into shorts, trying to take this to the downside, as well as a new range internally. Where are we manipulating within this range? In discount, leaving highs, leaving more reason to move to the upside, right? So let's go ahead and now look on these lower time frames. Price broke structure to the upside, I believe on the 8-hour. Yeah, 8-hour time frame, 8-hour institutional candle that I've used right here. Broke structure to the upside right here. Candle before that lies right here. It's also an institutional candle, right? And then we see the mitigation of that, and then another break of structure to the upside internally. It tells me that we're introducing demand. Your candle before that displacement candle to the upside lies right here. If you wanted to do some lower time frame refinement on that, your 4-hour zone before that break of structure to the upside that had occurred right here, candle before that candle lies right here within this zone. I went to the hourly and then I believe the 45-minute, and I had found a really clean candle. Yeah, the hourly candle. Candle before candle that broke structure to the upside with displacement, with imbalance, right here. So we saw the creation, mitigation, right, and then the liquidation and the actual move following. So your candle before candle, and then I believe it was the 45-minute chart. But this is what I wanted to show you within this certain trade, why this was, why I was still looking for price to come within this area over here, right? When I was still looking for price to continue to the downside, to seek this area over here, over here, over here, even here, right? Why we are still looking for that continuation into this area right here. So the reasoning, why retail can get very, very, or I want to talk about time efficiency with this, why retail can get in that mindset where they want to be right, and why the market will quote unquote allow them to do that, right, is for that manipulation. Meaning, if you look at this, right, as we are coming down into this area of demand right here, filling this area of imbalance, we start to see moves to the upside, right? I'll go to the hourly chart. We start to see candles to the upside, right? Strong bullish candles to the upside when we come into these areas. And this is what threw me off, right? And why I didn't want to enter any longs within this move to the upside right here on this candle or anything similar like that, right? Is because did we even see a mitigation of that zone? And I talk about limit orders a lot. Okay, we saw one move into that. But what is that? What does that show me? That this shows me that limit orders were opened up on this move to the upside right here. So we had a lot of limits, right? Open right here, and it's straight manipulation, meaning this move to the upside just creates more sell side liquidity, right, to the downside, more reasoning to then travel into this institutional candle into areas deeper that actually cause the move to the upside, so algorithms can then stack their positions, take the most liquidity available out, right, and then continue to the upside. So this is that inducement, right, that we talk about a lot. So even though it was a month and a half of waiting, and then you get these large moves to the downside, right, now retail is short because this entire time they're like, I've been longing, and then now I'm stopped out of my trade. But what happened, right? All it did was just revisit that area that caused that internal break of structure to the upside from the overall bullish narrative that we have, right? Discount in our higher time frame range, discount in our lower time frame range, still respecting demand from the internal breaks of structures to the upside that we see, right? And now I'm looking for reaccumulation after mitigation of this. I believe it was a 4-hour zone. Yes, 4-hour institutional candle that I had right here. I'm looking for some reaccumulation to occur, so I'm looking for some possible shorts to longs. Shorts are going to be counter trend within this trade, but once this area is mitigated at the 165.338 institutional candle that I have right here, obviously it's mitigating the entire thing, but I'm looking for the body to be mitigated. Once that happens, and then I see some lower time frame confirmation on the hourly time frame chart, then I will look for the possibility to take this to the downside, and then I'll look for the hourly break to the upside after mitigation of demand that had caused the break of structure overall internally, right? And then we will look to take this very, very, very far if it continues to hold that bullish narrative that we have. I want to show you this weekly time frame, weekly, monthly time frame, right? New areas from lows that caused internal highs. This would be your week high, right? Next area of supply on your monthly time frame, but I'm looking for that possible reaccumulation to catch some very, very nice entries for that overall narrative up into that area of supply, as well as that buy side liquidity. But that's pretty much all I had for GBP JPY. I don't think there were many other questions or anything similar. Yeah, I don't see anything else. If anyone wants to say anything, they can now. I'm going to go ahead and end this in about 2 minutes here, but if you feel free to ask any questions, go ahead and do that now. And if not, that is all good. like I was saying, guys, keep it as simple as possible. I'm literally here doing this repetitive stuff with you guys so I can show you that simplicity, to show you that it is repetitive, to show you that it's the same thing over and over again, to show you that there's nothing new, there's no bells and whistles. We're looking for the same behavior over and over again. It's showing that, the charts are proving that, right? We talked about USDJPY continuously moving to the upside, continuously taking out shorts, and what's it doing? This isn't surprising to us, right? It's continuously moving to the upside, so we're continuously looking for longs. We are taking disproven from the supply that was created right here, right? It's violated. Gives me more reasoning for a price to continue to the upside. More reasoning, right, for a price to seek that higher time frame liquidity goal to the upside. We talked about USDJPY down here being bullish. We talked about it right here being bullish. We talked about it right within these areas being bullish. We talked about it right here being bullish, right? It's going to continuously show us that narrative until we are proven wrong. We saw some type of displacement to the downside, some possible supply that was being created, but then we saw it violated. So I'm still bullish, right? I'm still looking for demand, look for the impulsive moves to the upside, look for what caused that, continuously take it to the upside. But it's literally the same thing over and over again, right? I'm just trying to keep it as simple as possible for you guys, so you guys can get that understanding. That's all I look for, right? We take out the early longs or the early shorts. Once they are out of their trades, we look for the introduction, right? With that displacement candle, that footprint. Once that happens, enter your trade, target your structural liquidity, and you are good to go, right? Obviously, the swing to scalp is going to be a lot different based off of your personal narrative. I like to swing, so I like to wait for the higher time frame to lower time frame confirmation. You don't have to do that. You can play an hourly range using 15 to 5 minute confirmation, right? And still achieve profitable results. But that is just how I like to look for certain trades, how I like to trade. I don't like to trade a lot, right? But with that being said, as far as simplicity goes, right, that's just the technical aspect of it. The rest is going to be up to now um, your mental and your psychological ability, right, to trust yourself and put that away, because all you can control, right, like I was saying earlier, is your risk management. So if that is the only thing you can control, that's all you should technically be worried about, as far as being right or wrong, right? That's all I should technically be worried about, is how much I'm going to lose on this trade, right? Based off of my risk management. But with that being said, I thank all of you guys for popping out on this Tuesday night. Once these plays start to come up into development, then I will start to post entries and exits. As far as that goes, we will go over the GBP NZD play later on Thursday. But with that being said, again, thanks everybody. This was recorded. Will be posted to YouTube after. If you have any questions or anything like that, feel free to at me in chat or DM me, however it is. But with that being said, thank you guys very much, and I hope you all have a great rest of your day and or night, and I will catch you all later.